Today's episode is brought to you by Kraken Pro. You'll hear more about them later in today's episode. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Yo,
what is going on, Jonah? How we doing? How we doing today?
We doing? How we doing, Avi?
We're great. You know what? I realized that X started this new thing where they don't immediately post the live, so we just have to wait and wait and wait for all of our people to come in.
For all of our lovely. Just lost Avi. AV issues. We're just going to rename this pod from the 1000X podcast to the audio video connectivity issues discussion forum. Austin, you want to join me for a second while we wait for Avi? Come on, what's going on here?
Yeah, let's do it.
Yeah. So while we're waiting for Avi to get back, just figured I'd share that this sort of warm, natural, suntanned glow that you see on the video feed here is actually not my real skin tone. I'm using a camera filter because it makes me look more handsome. Yeah,
you're looking suave today.
Thanks, man. Yeah, I live in the town of the Kardashians and the fakeness. All right, Avi's back. Okay.
Hey, yo. That was very. I always will blame Austin.
Yeah, it's Austin's fault. Basically, I was just telling Austin, this is we're renaming this from the 1000X pod to the audio video connectivity issues podcast.
Yeah, I think that's very fair. Look, we've got 70 people on. We're gonna get Jonah is looks maxing.
Oh yeah, another thing I shared.
What the hell?
Yeah, so basically you see this warm suntanned skin tone of mine right now? Yeah. It's not real.
Tell me about it.
I'm using a video filter.
Oh, so you're using a filter. This is all me, baby. This is all you're gonna get.
Yeah.
No filters here.
You're naturally tan. I'm naturally like pink when I'm cold and see-through when I'm not cold. So yeah, that's
the downside to being 100% Ashkenazi Jew, you know?
Yeah, exactly. Actually, I got it backwards. I'm see-through when I'm cold and pink when I'm warm. That's how I roll.
All right. So now that these are all the real ones. Everyone on this podcast right now, I want you to know that you're an absolute real one. And so we're going to tell you something, only you guys, that we're not going to tell anyone else after I post this tweet. And do you guys remember the terminal that we were working on?
I remember.
you Jonah, you remember the terminal that we're working on? Well, we're pushing out in the next 2 to 3 weeks a major update. And it's going to be, I think, a very, very, very competitive product. And the token is currently trading at 800K market cap. So that's just for you guys. Not for once I send out this tweet. All those are the fake ones. Those are the ones that aren't with us from the start.
Yeah, they're just
you the real one. They're not our friends. You guys are our friends.
You guys are the best. So how do we get the word out that we're podcasting? What is
I just have to make this post here.
Okay.
Be like, we are live. What is the most clickbait thing that I could possibly post right now, Jonah?
Bitcoin's a binary trade.
We are live.
1 million or zero.
No, but I feel like like it can't be like overtly clickbait. You know, it has to be. It can't be like Bitcoin's going to zero. Who's clicking on that? You know.
Yeah. So I'd say the most clickbaity thing would be like, the New York Post kind of has this down. Hot chicks that die unnatural premature deaths. It's usually like the most clickbaity thing. So if you want to post like a picture of somebody with huge boobs and then say woman accused of ... find out now in the 1000X podcast, that I think that would attract some viewership. Maybe not what we're looking for though. Another clickbaity way to do it is to say we're not like legitimate debate about the directionality of markets. This is uncertain times. Like we hash it out. We disagree. I don't know.
All right. Well, it's out. What I did is I just made a list of all the topics that we're talking about. Let's see if that works.
Let me retweet 1 second.
Yeah, just hit that retweet button. Where am I? You know, if you were a real one that has been watching the podcast for some time, you would know exactly where I am, because this background should be familiar to the people that watched this podcast 2-3 years ago.
Yeah. Is it your house in Hyderabad?
What? Why did you, of all places to pick?
Because you're Indian.
That is that the only Indian city that you know?
No, I just came up with like the outsourced IT center city just because I was trying to make a joke, but it didn't really land. So I'm sorry. Let's delete that. Austin.
I'm North Indian, man.
I don't know where Hyderabad is.
It's in the south.
You're from Kashmir, from the semi-autonomous mountain region.
If I was from Kashmir, I'd be white. All those people up there are white.
Weird. I didn't know that.
I know. It's crazy. Okay, so we're at 200 viewers right now. I'm gonna wait until we hit like 300, and then we can really kick it off. I'm kind of liking this new form of podcasting, Jonah, where we just sit here. We cold open. We sit here. We wait for everyone to come online, and then once we get like critical mass, we start going for it.
Let's talk about your house in Puerto Rico for a second. What's out there? Is there a pool?
So there is no pool, unfortunately. That is just the patio. It's a nice patio. I had it repainted about a year ago. This nice blue.
Mm-hmm. Beautiful.
Yeah, no, it's really nice. But
I haven't the shelf too. Nice copy of the Talmud you got going on there, whatever that is. No, it's too small.
No,
it's not the Talmud.
These are all the books from there's one shelf that's just like all the books from my childhood. So I've got the Harry Potter series, I've got the Artemis Fowl series, I've got the Alchemist for the real ones that know that, and then I've got like this book you would love, Jonah. Hold on, check this out. These are probably two of your favorite books in the world.
1000X Book Club is one of my favorite segments on the show.
These are probably the best books in the world.
Oh, yeah! I love both of those.
I knew you would love this. I mean, you were the one that told me to get this.
That's
and
the
I'm
Bible.
Pretty sure you also told me to get this one, but
I did.
Yeah,
the Bible and the Secret History of the World's Best Companies.
This is a phenomenal book. This is it's like a riveting piece of text. It really is.
It's incredible. And the little table at the back that shows Vital's earnings, I can verify that. Or maybe it's at the front. I forget which. It's either at the front or the very first or very last page. Those earnings are real. I can verify. I was up in there, and those numbers check out. So,
the net profits are pretty insane.
They published the book just before the wild ones started.
Is that Glencore had a lot of years where they just lost money?
Yeah, that's because they decided basically. There's the old adage, if it flies, fucks, or floats, you're supposed to rent, not buy. Obviously, that's foul-mouthed, and I would never coin that phrase myself. But an additional sort of corollary to that theorem in the world of trading is that if it's a hard asset, you're also supposed to rent, not buy. Those things depreciate. So what Glencore did wrong was, unlike Vital, which is asset light, Vital rents everything. They have the world's largest navy, but it's all rented. Second largest, sorry, behind the United States. It's all rented boats, right? They don't own any ships for obvious reasons. Glencore went the opposite direction and went super asset heavy and bought a bunch of mines and assets and cargoes and all sorts of crazy things. And basically that immolated their returns to the shareholders. And this is what happens when you go from being a private partnership to a public company. So everybody in Glencore like cashed out around 2011 or 2012 or whenever the IPO was, minted a bunch of billionaires and centimillionaires. And then the company just went like asset heavy and did the whole quarterly earnings thing. Like basically the best model for these companies is asset light and majority ownership is employee, not outside shareholder. Then Glencore flipped that, and that's what happened there. Does that make sense?
Yeah, that makes a ton of sense. That actually, it's a good two things here. One, I'm pretty sure Twitter's down, which is why we have like 0 viewers right now. I don't know if Twitter's working on your end, but it just totally crapped itself on my end.
Twitter's down all morning.
Yeah, Twitter was down all morning. I think it's back down now. So we're
because they were bragging about how they're like Facebook has 150,000 employees and we have 30. It's like, yeah, this sort of thanks, Twitter. Good job.
This is actually, it's a good segue, and I'm curious your take on this because I wonder if there's a corollary between what's happening in the CapEx spending of these massive tech companies, and what you just said, which is it's better to rent than to own. All of these companies are saying, hey, we're going to go build these massive data centers and we're going to spend a lot of money because we want to own the data centers, because we think it's going to be smart to own the data centers. There's also the other argument, which is that they should not be spending all of this money building out data centers. They should be basically going out to contractors that will own the data centers themselves and rent them, just in case at some point in the future these data centers massively deprecate. It's much better to rent than it is to buy, right?
Yeah.
Than it is to actually own them. And so one of the things that I think a lot of people are confused about right now is like, are they actually going to follow through on this? Is it better for them to rent? Are they going to walk back their CapEx spending, which would be very, very, very good for their stock prices, because it means that stock buybacks could return, but it would be very bad for all of the stocks that have done very well recently in the data center world. So this is kind of a middling ground here where we're not really sure what's happening, but I'm curious your take.
Yeah, no, it's a great point you bring up, and it's sort of nuanced. So at the end of the day, every company is a trading company. Google kind of trades ads and compute. Glencore trades physical commodities. The time when it makes sense to own rather than rent, it's like a real clear distinction. If you are an intermediary in a market, actually, let me take an even further step back. Let's use the oil industry as an analog, because it's 100 years old per the prize and the book you just held up, and there's a real long precedent there. So there are sort of three components of any industry. In oil, you have production, that's called upstream. Then you have trading and intermediation, the middlemen, that's called midstream. And then you have like sales and distribution, that's called downstream in oil. That's like refining and then taking the refined products and like, selling them at the rack to trucks, at the pump to drivers, and, jet fuel tanks at airports and stuff. So basically upstream, midstream, downstream. If you are just a midstream company, buying assets is the stupidest thing you can do. And it feels like a honey trap that everybody just falls for. If you are an upstream company, you cannot rent, right? Like if you're digging stuff out of the ground, or if you're making things, like you have to own factory. You can't like rent a factory. I guess you could kind of go with a contract manufacturer, or like own royalties from streams of oil. Like it happens, but the big mega businesses own. Downstream, you also have to own, right? So and then we're going to take this analogy back into tech and then try to draw some trading conclusions. So downstream, you got to own a refinery, you got to own the means of production and sales and distribution. Otherwise, you're just kind of drop shipping only gets you so far, right? You have to own those channels. So basically, where midstream companies get tripped up is when they try to go from being like a Glencore to an ExxonMobil, which makes sense. You want to expand horizontally into the whole market and become this vertically integrated behemoth. If you don't go all the way, you just end up an asset-heavy midstream trader company, and that's a terrible business. The companies that succeed, like BP and Shell, they bought the assets and they followed through. So going to data centers, it's a very interesting problem. You have like data center companies like CoreWeave, I think, are kind of a bad bet long run, because for a variety of reasons, depreciation being the number one factor, and also I don't know, maybe not. We could talk through it. But if you're Google is kind of like the Exxon, Meta and Google, Amazon, Microsoft. These are like the Exxon Mobils of the compute world. And so given that they are vertically integrated, I think it does make sense for them to own the assets. And the reason why it makes sense for a vertically integrated company to own assets, whereas it does not make sense for a midstream company to own assets, is because they extract the full optionality out of those assets, because they can pull from their supply during times of shortage. They can push into their sources of demand that they own during times of excess. And so like those assets actually produce more optionality, which justifies them. If you're just an asset owner like CoreWeave, there are going to be real cycles for that business, like a midstream asset owner. So I think basically, yeah, I agree. Chanos said CoreWeave is basically a landlord for chips and that their assets depreciate rapidly. That is that would be a scary business to be in, just like amassing physical piles of chips and wires and just like sitting on them.
Because I assume, I mean, the only major difference might be, have we reached the pinnacle of chip development? Like,
No.
is chip development going to slow down a ton? Because this is actually an interesting question, because it's kind of what happened in the Bitcoin mining space, where Bitcoin miners were like horrific investments early on, because the rate of development was super fast, right? You were constantly, like, every year they're coming out with new miners, and then suddenly the pace slows down, and it slows down, and it slows down, and actually now the development timelines for Bitcoin miners are pretty long, because we've reached like the literal physical constraints on what you can do with these chips. And so
it's like miner difficulty. Difficulty
exactly.
is just skyrocketing.
It's skyrocketing, and it's not because of chip development and like faster chips. It's because people just keep amassing more, like we're producing more miners, right? Whereas in the past, the difficulty was skyrocketing because a new chip would come out and like 20x the efficiency of a Bitcoin miner. And so the question is, does it become a better business over time as chips become more stagnant because we've reached physical constraints? You're actually the chip guy now. So
yeah, I am. I mean, I haven't really talked about it much. So I'll still keep it on the DL. But in general, like the way that I view it is like amassing piles of hardware in data centers is going to converge towards the returns of like a real estate landlord business, like a commercial real estate empire, which I guess is good business, right? Like they're not going to go bankrupt. Glencore didn't either, but it's not going to be like the hyper growth, exciting thing to do, because again, you're a midstream company and you're just a hard asset owner. You're not like nimbly renting the assets you need to like use high leverage to bootstrap to basically to surf some mega trend, to surf some tsunami wave. Kind of like Bitcoin miners weren't great business until they pivoted to AI. Like maybe there will be a next big thing that CoreWeave can latch onto after AI, but somehow I don't think so. I think I think this is the final wave in the set, to stick with my surfing analogy. And once they've ridden that out, it's gonna go down. I wouldn't be long CoreWeave here, that's for sure. However, I don't think it's a bad idea for Microsoft and Google and the other hyperscalers to be amassing physical infrastructure, because they're actually going to need it for a long time for inference. And there's tremendous optionality in there. Like, let's say that we go into a glut for compute, there's never going to be a shortage of demand from their internal needs, right? Meta advertising and just usage. Google will always have a place to put the compute. This is why Exxon has assets, right? Like when there's a glut of oil, they can just shove it into their refineries and tell their refineries you can't buy from anybody else. Same thing with Google owning a data center. If the external demand for compute dies down, they'll still have internal demand for compute that far outstrips their physical infrastructure ability to provide it. So it makes sense for them to own. That you kind of getting what I'm
yeah, no, I get what you're saying, is that they can pick up the. I also think a big part of it is that they just have the money, to basically eat the low times, like eat the lean times. But I do think that the amount of money that they're spending is sort of making a bet on exponential growth of demand. And if we don't see that exponential growth for an extended period of time, I think that we could see some issues. But I'm of the opinion that it's possible that we're actually going to see some walkbacks in the CapEx spending that these companies are doing. Basically, everyone's gotten so nervous. I mean, Google's now trading at 300. Meta's been doing terribly. They sort of have been caught up in this rout of tech companies across the board. But I don't think that's very fair. I think that this is actually, like, this is a pretty good time to go buy Google now. This is a pretty good time to go buy Meta. It's a pretty good time to go buy all these mega cap tech companies, because I do think that one thing that we're not quite appreciating is just how horrible the SaaS apocalypse has been. But what it also means for the large cap companies, right? Basically, everyone that pays insane amounts of money to go use Atlassian, to go use Intuit, to go use Workday, like the amount of money that is spent on Slack and Adobe and Salesforce, like the companies that can cut these people out now because of AI, the speed of AI development and what you can build internally, they're going to save. There's going to be tremendous savings. Like the revenues from all these companies are basically going to get back in and reinvested in the mega caps that can actually create them internally. And so this is like the best trade of all time right now. I mean, it's already sort of played out. So I don't know if you want to take the short side here. Like, I don't know if you want to go continue to short Adobe down 25%, continue to short Atlassian down 47% year to date, right? But basically what you're going to see is the revenues that were going to those companies are going to be absorbed into savings from Google, and we're going to see the profit go up. And this is what people talk about when they say AI is going to improve productivity and AI is going to streamline companies and it's going to, basically increase margins. It's all this. It's all the tens of millions, hundreds of millions of dollars that are spent on these companies that produce billions of dollars of revenue in total. That is going to collapse now because I think a lot of these things are going to be built in-house. Like I wouldn't be like, Salesforce is a great example of this. In the next 3 years, I guarantee you that a lot of people are getting rid of Salesforce because they've just built their own internal tools. And so this is like the SaaS apocalypse to me, what everyone's talking about and all these shorts, I think is really relegated to the B2C area. It's really relegated to these large companies that can afford to develop in-house. But B2C, I think, is a little bit more safe just because the average consumer is really dumb. And it's actually like once they have buy-in to a product, it's quite difficult for them to switch. And distribution is still key. Like when it comes to the consumer is never going to make the calculation, could I build this myself or should I spend money to go pay for this thing? Yeah. Businesses make that calculation every single time they sign up for a product. Should I build this in-house or should I buy this from somebody, right? Off the shelf, or this is exactly the discussion that we were having. Do you build it yourself? Do you own it or do you rent it? And for the most part, because there's been such a high bar for entry for building software and so expensive, the answer is rent. You want to rent because you don't want to, it's inefficient to build it yourself. But now I think it's very efficient to build it yourself. So that's sort of, I'm still on this. I'm still on this trade. I think, you buy the mega caps, you short everything else. You short the service providers to the mega caps right now because they're just going to figure out how to do everything themselves at this point. I think that's actually probably a pretty actionable trade.
The Salesforce stock price, I mean, like, you got to be careful though. Like the Salesforce stock price is almost down to the 2023 lows. It's trading 189 right now. All-time highs was the beginning of 2025. It was 362 when Trump got elected the day after. Now it's down like 50%.
Yeah, the way that you short generally is you wait for the bubble collapse to occur, but then you don't short on the way down, right? What you do is you wait. At some point, there's going to be a violent bounce. But if you believe strongly that you're in a secular downtrend, then that's your entry, right? You wait for Salesforce. Salesforce is almost at the 2020. It's actually not almost at the 2022 lows. The 2022 lows are 131. It's currently at 190. But basically what you wait for is like a 1 to 2 week period where the performance we're up like 15 to 20% on these companies, and then you go short, right? That's the way that you manage a short. Is you want to short these things in strength. And so if I'm constructing a trade here, I'm definitely, like, I'm still a buyer of Google. I'm still a buyer of Amazon. I'm a buyer of Microsoft. I'm not telling you to short Salesforce and Atlassian here, but I do think this is a trend that's gonna continue for an extended period of time. I mean, this is like, I view this as the alt market blow up equivalent for crypto, right?
Yeah.
Like when you hit a bear market, the shit that is useless goes to zero. And I think the thing is, it's easier actually to short Salesforce and Atlassian and Intuit. It's easier to short them because they actually have revenues that you can look at. So all you have to do is say, okay, let's see, are their revenues actually going down? Are people actually canceling services? If you don't think that there's anything to reverse that trend, these are phenomenal shorts.
I mean, I like your framework for shorting stuff. You know, at the beginning of the year, you were talking about shorting meme coins because they just bounced, and looking at my least favorite one ever, WIF, or my favorite one to hate, the one I love to hate. It traded from 25 cents up to 50 cents, and now it's trading 23 cents. Like, in these violent bear markets, you get squeezes. If you're just sitting there ready to, with the hammer in your hand, ready to play some whack-a-mole, you can make some money. You can whack some moles.
Yeah, I mean, it's really the same trade as the crypto trade.
How is the crypto trade going, by the way? There's a Crypto Worm on brand wrote, when crypto. I think, I mean, I sound like a broken record. I think you just got to wait it out. It's not the hot item right now. Now, I mean, our daddy, Mike Ippolito, tweeted something, try to pull it up here. He's saying he expects crypto to go into like a 9-month minimum bear market. Let's see here. I'm going to read his post because I think it's relevant and I want to talk about it with you. I'm kind of wondering the same thing. Some thoughts on this market. I'm going to try to do Mike Ippolito's voice. Some thoughts on this market. I think it's likely we're entering a full-on crypto winter. I'm also open to the idea that this bear will be as bad as 2022, perhaps even as bad as 2019. The short-term reason for this is that their industry is in an air gap created by unsustainable valuations and regulation. We've been pounding that table on this podcast for years. Historically, valuations in crypto have been driven by the hot ball of money. Money comes in, and because it was literally illegal to generate value for tokens, revenue and cash flows were entirely disregarded. Prices were set by the amount of capital times the supply of tokens. The sexier and more risk on it was, the higher it went. There are two things that are different this time. The biggest difference is that it's clear that there will be a regulated path for crypto projects. I'm skipping ahead. This is good, but it presents an obvious problem for protocols valued purely based on speculation. Once there is a regulated way to generate cash flows and not get thrown in jail, that is all the market will want. So what is confusing many investors and founders right now is that fundamentals are growing, but tokens are still selling off. This is because we're resetting how valuations will work, and the starting price for almost every project was way too high. We said that on this podcast. Additionally, crypto is getting absolutely mogged by AI. The last couple of years of meme coin stupidity are catching up with us, and unfortunately, we didn't build anything useful. All in all, my best guess is it is a 9 to 18-month bear market before things get better. Oh my effing God. Avi, what do you think?
I think that's pretty reasonable, but it sort of depends on what you think of when you say bear market, right? There will obviously, in my opinion, be a bear market for really shitty, terrible assets. But you have things like Morpho and things like Uniswap that are getting bought up by large institutions right now. You have things like Hyperliquid that are generating real capital. I'm crossing my fingers that one day Syrup will stop sucking ass and actually start going up again. But these things are actually generating real revenues and becoming real companies. And we've talked about this ad nauseum in the past, and I don't really want to beat a dead horse, but this is the .com implosion moment where your pets.com, it goes to zero, but everything else ends up going up. Right? So, like all the stuff that is actually a good company run by smart people that are looking to exist in 5 years, where most of these crypto projects are just looking for a quick buck. The things that actually are trying to build, I think, are very, very, very good trades, because right now what's happening is they're being dragged down by the broader market. They're being dragged down by this idea of a bear market, right? I mean, like Hype's trading as much volume as Coinbase now. That's insane. Hype's not valued nearly where Coinbase is.
No, although they're converging quick. Holy moly, Coinbase is just imploding. You know what? You're right. Like, this really is the technology market in 2001. Pets.com is, or I guess maybe in 2000, Pets.com is dying, and Amazon is getting hit in sympathy. But the next 25 years are pretty bright for the projects that actually build. Like, another one that I didn't want to leave out, my favorite, Aerodrome, or as my Italian and French friends pronounce it, Aerodrome. I think it's got a lot of upside from here. It's just the question is like, when does the good stuff stop getting dragged down by the bad? Mike Ippolito says 9 to 18 months. To me, that just feels like, and I don't blame him because I pull stuff out of my ass all the time. That feels like a time frame that's been pulled out of his ass. Now, I don't have any issue with that. I can't help but wonder, and we should probably discuss why. Like, what is that in the past? In the past, there were like catalysts. It's like, okay, well, Luna and FTX just blew up, and volumes are down 90%. People probably won't re-engage for at least a few months, maybe years. Here, it's like, what? All the regulatory and narrative backdrop is so constructive. It's like, why should it take 18 months for the valuation convergence to occur? There are huge trades here. Short garbage against being long good stuff. Short Coinbase, long Hyperliquid, short Whiff, long Aerodrome. Like, what am I missing? Why does it take 18 months for the market to correct? Or is Mike Ippolito right?
I think what happens here. Well, there's sort of two things that we need to talk about. If you're an investor and you're just thinking about, like, how do I think about trading the crypto market? Well, two things are true. One is that we're having a massive blow up moment, and that this has been talked about, and that it's probably going to take some time to wash out all of the exuberance that we experienced. I think we pulled forward a tremendous amount of value just because of what Trump did, pumping up the crypto markets, launching his Trump coin, launching the grifty ass Melania coin, basically trying to bring in like, right.
That was so funny.
Basically trying to bring in like as much money as they possibly can, and then exit the nonsense. But what is also true is that animal spirits always return. They always return. And all you need in order to get a massive, massive, massive rally from altcoins, from crypto as a whole, from meme coins, from any of this shit, is simply for valuations to go low enough to the point where it doesn't take that much capital to send them higher. And then suddenly you're going to start to see, like, if Pepe goes to 50 million bucks or 100 million bucks, it's probably going to 5 to 10x at some point after that. Because I don't think animal spirits go away completely. Over time, it trends to zero, but there's always going to be pockets of exuberance where everyone floods into the market, because if it's very simple. It's very monkey brained. It's always monkey brained. Yeah, Melania.
I'm sorry. I just had to share a Melania coin while we're here. That's all I have for now. Let me remove it from the presentation. Sorry to interrupt your rant there, Avi.
That was good, Jonah. I'm happy you brought that up.
Now, the animal spirits are back. I mean, also another thing is another evidence of this is like prediction markets. To me, prediction markets are the new crypto. It's like, okay, people have gotten a little bit worn out and drained from betting on random meme coins and 2021 and 17 style ICOs that have no connection to any business, if there is even a business, especially the 2017 ones. It's like this is Python for crypto on the moon. When future spacefaring civilizations will need that, this is the coin that they will use. And obviously people would gamble on that stuff back then. That got a little in 2021. There had to be the veneer of a business. Then no businesses materialized except for gambling ones. And now I think prediction markets are the new altcoins, right? Like, why bet on some random crypto project? Why, even if it's a halfway decent one, why bet on Layer Zero, or why bet on Monad or Gonad or Say or Sui or Aptos when you can gamble on, like, how many times will Bad Bunny grab his junk at the Super Bowl halftime show, right? Like 9 bid at 16, lift the offer, you hit in the bid, right? Like, prediction markets are the new shit coins. And so I think a lot of attention and gambling money has just shifted to other sources of sugar rush online.
It'll come back, and the very specific reason that it'll come back is because prediction markets are not a cohesive entity. They're not a cohesive thing where everyone on the prediction market is all making money together because the markets are correlated.
Crypto community building there.
There's no community building. There's really nothing. And honestly, it's very, very, very rare, obviously, that 1 in 100 events happen. the density of 10 to 100 X's that occur when crypto is hot is way higher than it will ever be on prediction markets. And so obviously crypto is like, I mean, imagine this. Crypto is the equivalent of going to a casino and losing over and over and over and over. But then for like a 15-minute period, everyone's slot machine is hitting. Everyone is making so much money. Everybody is buying bottles of champagne and sending them to one another.
It's like Ocean's 11.
And you're just having the greatest time of your life. That is what crypto is. That is the value out of crypto. It's this weird niche game. I'm genuinely serious. It is
so real. It's so real. I've never heard of it that way. It is like when everybody wins at the same time.
It's just like, it's like so much more fun to all make money with your friends. That is the core value proposition of crypto. It is not a tool for gambling. It is a tool for gambling with your friends and making a ton of money with your friends and being part of a community that just minted millions of dollars for God knows what reason. Like that prediction markets will never, ever,
no, they won't. Let me jump in
they'll
here.
never be able to replicate that.
Prediction markets will drain people.
Who's all winning together? Nobody. Like, these events are completely uncorrelated events.
There's
right?
zero sum also. That's the difference. Crypto is not zero sum, whereas prediction markets are zero sum.
Well, crypto is zero sum in some ways.
No, it's zero sum in the sense that crypto is zero sum if you think of it as a closed system. If you think that the communities that are built by crypto can bring outside money, like X crypto money into crypto, can generate immigration, then it's not zero sum the way that like the United States of America is not zero sum. An individual prediction market is literally a zero sum game. And the problem with prediction markets, and the reason why I think they will, maybe the market cap of money invested in prediction markets continues to grow, but like each one is a zero sum game. And the reason why I think prediction markets will drain retail a lot faster than crypto did is because is precisely for the reason you just described. There are sharps at the tables of these prediction markets. There are people who actually have talked to Bad Bunny before the halftime show, and he's like, "Hola, I'm gonna grab my junk, 25 times. Take the over, right?"
Why are you obsessed with the idea of Bad Bunny grabbing his junk?
Because he did it. He did. It was very inappropriate for my children. I had to turn it off. It bothered me. So I'm just harping on it.
You're just stuck on this point. You're like, he just kept grabbing his junk.
It's like, come on, man. It's the Super Bowl. Don't do it. I've got a 3-year-old girl. Like, stop it, Bad Bunny.
Perfect.
Every time I exit my Jew bubble, honestly, I'm in my little religious Jew bubble in LA. Everything's sort of like the way I'm used to it. Every time I just sort of open the shades and peek out a little bit, I'm just more and more horrified by what's going on in society. It feels like a total alien invasion is taking place that I'm just sheltering myself from. Anyway, my point here is it's a zero-sum game. At every single one of these markets has some insider who actually knows that insider trading is not illegal. Everybody knows bear market so bad. We talking about Bad Bunny junk.
Dude, I love you guys. I love our listeners.
This is so fun. I love.
They're
this
all
community.
hilarious.
Twitter just turned back on. We got viewers now. Amazing.
Yeah.
So basically, my point here, to make a long story short, prediction markets have insiders who actually know the outcome of these bets. They will drain retail a lot faster than retail got drained by, just sort of community style investing in vibes and, the sort of grand vision that you have when you sit down at the craps table of crypto. Except the difference between a craps table and crypto is that the casino doesn't allocate the bet size, right? Like money can come in ad infinitum in crypto. So yeah, man. I think, and so this is what I would just advocate for is you really shouldn't write crypto off, and we can stop there, and I'll explain that more later because we got to hit the ad break. But you can't write crypto off because it will always come back. Well, no matter what happens, it will always come back because all it has to do is go down enough so that that people are willing to gamble on it again. Like it can't go to zero. That's the thing. Anyway, let's hit that ad break.
If you're an eligible US trader looking for an edge, Kraken Pro is the only crypto exchange offering margin trading in the US. Qualified traders can tap into 150 plus margin markets with up to 10 times leverage on select assets, using Bitcoin, Ethereum, USDT, and more as collateral. Plus, you get real-time risk tools and Kraken's signature deep liquidity all in one trusted platform. Check out Kraken Pro and see if you qualify at kraken.com/features/margin trading. Crypto trading involves risk of loss, and margin is not for everyone. Margin services are offered to U.S. customers through Payward Interactive, Inc. For full disclosures, visit kraken.com/legal/disclosures and review Kraken's margin disclosure statement.
All right, we're back. So actually, we're getting like people are coming back on the podcast now. We're up to 2,000. It's still very low, unfortunately. The Twitter breaking really just it left us with you guys, and I'm very happy that you guys are here, and I'm very happy that you're listening to this podcast, because again, it means that you guys are the real ones. You guys are the one that fought through the Twitter breaking down. Maybe you're even on YouTube. If you're watching on Twitch, that's crazy. There's one person watching on Twitch. Don't know who that is. Shout out to you.
Yeah,
that's nuts. Who the hell watches this on Twitch?
There was a guy on Twitch who added something in the comments. He asked if there are black Jews, and I wrote, of course there are black Jews. Amari Stoudemire.
That guy's not on Twitch.
Oh.
What is it?
Yeah, here we go. Avi looks black in this lighting.
That guy's on YouTube.
Yeah, he's on YouTube. My bad.
YouTube. I love our YouTube listeners are just, those guys are the peak.
Yeah,
those guys are those are the real ones, actually. And I might have to take it back, because I don't know how many times I've explained this. This is just what my eyes look like.
Yeah.
Like I swear to God, I got good sleep last night. I don't know what to tell you. But
maybe you should try some cosmetics by Kylie. Kylie Cosmetics. You can just apply a little whatever it is, touch up.
You think I'm gonna wear makeup? I know you put on video filters, but I'm not.
I put on a video filter. We may as well just totally cartoonify ourselves and just become instead of two Jews talking about crypto, we could become two Korean girls talking about crypto. With all that, nothing on Instagram is real. Nothing is real anymore. It's crazy.
You know what would be a crazy crossover?
What would be a crazy crossover?
If we did a get ready with me and talked about crypto. like what we do is like we would be on one side of the screen, and we'd get some girl just to get on the other side of the screen, and she'd be putting on makeup.
That is clickbait.
And we would just be talking about crypto.
That is,
and like audio would just be solely crypto, but it would be like some girl getting ready. I think that would work on TikTok.
I think if we ever want to go for the talk, I think that's what we've got to do. I actually had a group of TikTokers that tried to rent my house back in 2020 during COVID. It was like, the sad thing is it actually would have been preferable to the tenant who I selected, who's, obviously the guy, but like my landlord, or sorry, not my landlord, my real estate agent was like, all right, I have to show every offer to a landlord. It's legally required in the state of California. I don't recommend that you take this. Let me just caveat what I'm about to say with that, but a group of 18 TikTokers want to live in your house. Full disclosure, they will be like skateboarding off your roof into your pool, like crashing Lamborghinis into the, whatever, the front staircase. They'll repair it. Here's an insurance deal. And the answer was no. And I guess trying to tie this back into investing, crypto right now is being handed from OGs to TradFi. And that's basically like the two of us are sort of like the real estate agent podcasting to TradFi, saying like, guys, crypto's offering itself to you right now. It's a bunch of 18-year-olds that want to like crash their Lambos into your swimming pool and skateboard all over your house and stairs. Do you want it? And TradFi is just kind of like, maybe we're going to be a little selective here. And try to invest DCA into Bitcoin over the next 72 months instead of just FOMOing your bags right now. I think that's making it life very, very difficult for people who work in crypto, especially crypto VCs. I don't know how they're coping right now. That's got to be a very difficult job at the moment, tricky to navigate. Chris Dixon posted a long thing about it. It's hard to, I basically think the only way to invest in crypto here is to play the long game. It's almost impossible to trade the short term unless you're pairs trading it, in which case, shout out to Pair Protocol and their thing that they're doing on Hyperliquid. That's probably the only way to actively trade crypto here without getting immolated.
I think that's unfortunately fair. Maybe go sign up for Pair Protocol and just start putting on all these pair trades, because the issue obviously is that the interest right now is dead. And like I've been talking about for a while, I have my framework. It's called value versus momentum. And we definitely have downwards momentum. The question is, where's the value? Now, my take is that there is value at like 60 to 64K per BTC. And that's where I would look at accumulating long term. I mean, maybe we get down to 52K, at which case you really can back up the truck. But candidly, that's what I said at 80. I was like, I think this will be good. And then we trade straight back from 93 back to 86, and you're like, okay, I guess there's just infinite sellers. I mean, there's no real narrative for Bitcoin to go up right now, because it used to be the gold narrative, and I think it's decoupled from gold for too long of a time for that gold narrative to come back. So it really just has to be like a global liquidity narrative, and it just has to be like, it has to be once again the fastest horse in an all up market. We have to be in a market where everything is doing well, where liquidity is getting pumped into the system and animal spirits are back for it to reverse, or we need to be at a price where basically everyone looks at it and goes, that's a massive bargain.
Yep.
And
people are doing that, by the way. Like even my normie friends are doing
not
that.
Super far away from that. I do think the Quantum FUD.
We got to talk about that too. That was my next comment. Quantum FUD. We got to talk about the Quantum FUD. People keep asking me about that. I can. Well,
the Quantum FUD is real. And to explain what the Quantum FUD is, there are really two different levels of fear around quantum hurting Bitcoin. The first level of fear is if quantum computing gets to the level that it needs to, which it currently is very, 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 very far away from, and most experts think that it will take at least up until 2030 or 2035 to get the qubits up to the level to actually crack the encryption that's used to create the private keys. The fear is, if we get quantum computing, then all private keys as they stand right now are crackable, which means that your Bitcoin as it stands right now is not safe. And there are a lot of people out there that are saying when quantum computing comes out, Bitcoin will go to zero because everyone's Bitcoin is going to get stolen and it's going to get nuked. And that's going to happen because Bitcoin developers are not going to introduce quantum resistant Bitcoin accounts. They're not going to develop it in time.
Why wouldn't they?
That they're sticking their head into the sand, and that's going to be the catastrophic end of Bitcoin. That is not true. I think that the Bitcoin developers will introduce quantum resistant accounts, that we will introduce a quantum resistant mining algorithm, which is actually less of a fear than quantum resistant accounts, because quantum computing has a much harder time breaking SHA-256 than breaking the randomly generated private keys, but that's another discussion. I think that we will fix that. The main actual issue, which is why people are scared, is that in order to have a quantum resistant Bitcoin account, you have to move your Bitcoin to a new address. You have to generate an entirely new private key and move your Bitcoin over, which means any Bitcoin that isn't moved, that sits in an old address, is vulnerable to quantum computing. And there are 4 million Bitcoin that Satoshi owns that sit in a non-quantum resistant Bitcoin account, which means that the moment the first quantum computer is created, there is a massive bounty out there, and 4 million Bitcoin will immediately be sold probably on the market or taken control of. For context, when MicroStrategy has been operating and buying Bitcoin for the last 6 years, and they have accumulated 2.8 million Bitcoin. So 6 years of MicroStrategy buying is not even 75% of what will be unlocked when quantum computing comes, which it will come. It is an inevitability. And so really what we have to hope for is the first people to crack quantum computing are not massively greedy, and they crack Bitcoin, they crack that private key, and they burn the coins or something. Or the other possibility is that we fork Bitcoin. We soft fork Bitcoin, and those coins get locked forever. They get lost. They basically get burned. They get sent to a new address and they don't exist anymore. It's gone. Now, the issue here is that if you fork Bitcoin, obviously you're saying Bitcoin's no longer immutable. We've had this happen before with the BCH and BTC hard fork.
BSV.
And BSV. But what's happened? The forks died. BCH died.
What, dude? Sorry. This is exactly what's going to happen. Let me just give you the play-by-play. Quantum computing will start to get threatening. We don't know whether it's in 2 years or 20. When it starts to get threatening, but before the chain gets hacked, the devs will fork Bitcoin. The current Bitcoin that you and I have in our cold wallets will become Bitcoin pre-quantum, Bitcoin pre, and then you will get issued Bitcoin post, just like there was the BCH fork and the BSV fork. Bitcoin pre will trend towards zero, just like BSV and BCH have, and Bitcoin post will just keep on trucking and pick up at the same price and do whatever Bitcoin pre would have done if it weren't for the quantum threat. The other thing is the quantum threat applies to your JP Morgan account, your stocks, your bonds, your grandma's stocks and bonds. Like, society's just got to fork everything and switch it to between pre and post. There will be entrepreneurial hackers out there who steal grandma's pre-quantum assets and sell them off while they still have value. But honestly, like I don't see a problem here. This is literally happened already. Every chain we care about has been, I guess not Solana, but like the big chains have been forked. ETH has been forked. Like, this is just normal for crypto. There is no reason to fear. And even if you're like a Bitcoin pre-quantum maximalist, but you don't care about BCH and BSV, you just care about the current fork of Bitcoin that we're all trading not going to zero, and you're worried that somebody's going to steal Satoshi's coins with a quantum computer and sell them to zero. Well, I guess the big reveal of the show, we've only got 3 minutes left before the end of the show. The big reveal is that Satoshi is Mike Ippolito, and he's smart enough to move his coins over. So he's gonna protect us, and we'll be fine. Basically, you're on mute.
Thank you, Mike. We appreciate your sacrifice.
We appreciate you. Thank you.
Anyway, this was a fun show. This was good.
It's always fun. The hour went by like that.
I want to end with one thing now that we have some listeners that have gathered. As you know, Jonah and I have been working on the 1000x terminal. So if you go into your browser and you type in 1000x.money, this is the terminal that we put together. Now, unfortunately, our dev actually broke his arm. And so we, for the last 2 months, have been really struggling to push out a good product. We think we found a pretty amazing solution. And we've partnered with a group that has built an internal LLM that is really, really, really good, and they need a good distribution partner. So we're joining forces, and we're probably in the next 2 weeks to 3 weeks going to be pushing out a pretty major update to our 1000x terminal. And obviously, as always, the 1000x coin will take at least half of the revenues, if not more, from this terminal. And I think we're going to be able to build something pretty incredible. So I'm going to put two things out to the community. One, pay attention to the 1000x coin and the 1000x terminal over the next few weeks. When we end up pushing it out in the next the update, I would love if you guys ended up using it, signed up for account, try it. Right now it's broken, so don't worry about getting on there and trying it, but I did want to give you guys, the real ones, the heads up, because it's possible if the terminal is really good and a ton of people sign up, a lot more people are going to find out about the 1000x coin, and wanted to let you guys know about it now before that happens, basically.
Yeah, I mean, I wouldn't. Let's not interpret that as a shill for the coin. The coin is like our half of the whatever revenues come from this terminal is going into the coin for sure, because that's what we promised, and promises made, promises kept here on the 1000x.
Promises made, promises kept.
I would say what's exciting about the terminal is that when you bootstrap a project, even when you get kicked in the nuts, like what sort of just happened to us, there's nobody like shutting us down or bankrupting us or calling back debt. Like we're just going to keep going. We're going to will this thing into existence.
This
one
is a
way
fully.
or another.
I mean, I've sunk both between the two of us. We've sunk in multiple hundreds of thousands of dollars. We've lost a lot of money on this so far, but
ain't no thing, Avi. We're just going to keep going until we build the product we want to use.
We are absolutely plugging away. So do not worry, do not fear. We are not abandoning this project. We will never abandon you. So just know that we're going to be we're working our asses off for you.
Avi's got a fire in his belly now. I love it. So do I.
We're back to roll.
Love you, bro. This was great. Thanks for talking to me every week. I learned so much.
This was awesome, Jonah. We'll catch up soon.
See you soon. Later. Nothing said on the 1000x podcast is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed.